if the secondary markets are hot, it's the primary markets that are super hot. And joining us is the team from DOMS Industries. Remember, this is an IPO which is open for the second day today, and with us are Shri Santosh Rasiklal Raveshia. He's the MD of DOMS Industries, and Rahul Shah. He's the CFO of DOMS Industries. Good afternoon to you, gentlemen. The 1200 crore IPO has been oversubscribed majorly in the second day itself, in fact on the first day itself. So our congratulations are due. Let's just break down what the proceeds are going to be used for, and then find out more about your wonderful company, sir. So this is my first question to Santosh ji. What are the proceeds going to be used for? We have 850 crores, which is the OFS, and 350 crores, which is the fresh issue. Santosh ji.
I would like to say, sir, here that these proceeds are mainly going to be used for our expansion for writing instruments. So early this year, we have acquired 44 acres of land, parcel here in Umargaon, Gujarat, where we have all existing 13 manufacturing plants. On this particular 44 acre of land, we are looking forward to invest around 450 crore rupees on this particular expansion, out of which 73.5 crore of investment is already done on land, and the rest 280 crore will come from proceeds of IPO, and the remaining will be from the internal accruals what we generate.
Okay. Yours, sir, is a very, very competitive industry, although you have about 12% overall market share of the stationery and art market. And just before you came on the show, there was this gentleman who said that his son uses the stationery and the other instruments from DOMS for his painting. So our congratulations for this kind of a market share. But what exactly are the plans of DOMS Industries from now on? This money, of course, will go into creating fresh capacity, but what now from then on?
So, sir, we are right now operating and serving to our consumers and customer with 7 different categories. And these categories are such as scholastic stationery, scholastic art, paper stationery, kits and combination packs, office supplies, hobby and craft, and fine art. And so you will see that each category on its own is a it's a very fast moving spectrum. What we would like to do here is that, sir, each category we would like to grow, because as of now the challenge for DOMS is to service the need of the customer. There is in total it is a extreme pull which is from the market, and for us it is important to make to serve this particular pull in the right time. So to do that, what we are doing is, currently in our existing plant, we are first trying to optimize all our infrastructure, where we have the lower capacities machine, we are converting to higher capacity machines. Lower capacities mold are being converted to more cavities of molds. Also, sir, we have around 200,000 square feet of construction which already is in place, out of which 100,000 square feet of our plant is ready, partially under installation and partially under production. And also another 100,000 square feet will be getting the possession of that particular plant in another 6 months. So we are looking forward to increase our capacities of all our existing categories, where we are right now in short supplies to our customers. And also there are certain categories which are going to be added further.
Okay, let's get Mr. Rahul Shah in the conversation. He's the CFO of DOMS Industries. Mr. Shah, let's look at the top line. At the moment, the number in front of me for March 23 is 1,212 crore rupees, and this is substantially higher from the 684 crores that you stuck in March 2022. First, tell us how the first half of the current financial year has panned out, and if you can share with us how things look 1 or 2 years from now as far as sales and profit after tax is concerned?
Yeah. So just to give you a background, we did about revenues of about 400 odd crores in FY21, then about 680 crores in FY22. Basically, these 2 years were, a COVID impacted period for us, since our major sales happened around educational institutes. With this being shut due to COVID, in these 2 years, we faced a little lack in demand. But with 2000 in 2023, with COVID restrictions being lifted, and there was being a lot of pent up demand in the market, we were able to achieve a healthy growth of over 77% in FY23, where we did about 1212 crores in terms of top line. 2024, the first 6 months are something which we call as a normalized period. And in this period, we've done sales of about 761 plus crores. In terms of margin, our margins have improved over the last couple of years. We did about 15.4% in margin, EBITDA margin in FY23. And for the first half, our margins were close to 16.7%. This margin expansion has been a result of better operational efficiencies with the size and scale that we've now achieved, as well as some positive impacts because some material prices have been slightly lower. At the same time, we've been able to increase the average selling prices of our key products, resulting in better operating margins for first half 24.
Okay. Mr. Shah, can you share the half year profit that you clocked and what was the full year profit in March 2023?
So March 23, our PAT was close to 103 crores. And in first half, we've done about 73 crores, which is about 9.6 times our sales.
73 crores is the PAT in H1 23, and what is the sales?
761.8 crores.
Okay, 762 crores. Okay, okay. So it's roughly a 9.7, 9.8% NPM. Okay.
Yeah.
Let's get down to the basics. When you look at the price at which you are offering the share, 750 to 790, it's basically at a price earnings multiple of 50, and the price to book is 6.2. Mr. Shah, this is very, very expensive. When you look at your peer set, the average is just 30 when it comes to the PE, and the price to book at 4.7. How do you justify this premium?
So, just to give you a background, DOMS as a company is a little different from probably our other peers. We have one of the most diversified product range when it comes to stationery. We have more than 25 plus products which we sell under 7 different categories. At the same time, one of the key factors, for our success has been our focus on R&D, where we have, more than 50 people who helped us to get, more innovative and improved products in the market, as well as at the same time, our manufacturing infrastructure. Today, across almost all our product lines, all are made in-house. We don't believe in trading everything made in-house and completely backward integrated. So these are a few factors, along with our distribution network, which is, where we are spread across more than 120,000 retail touch points in India. So these are the factors which differentiate us. In terms of pricing, like you would be aware, pricing is something which is determined by the BRLNs based on the feedback that they receive through the various roadshows that we do with institutional investors. And that's how the price has been derived.
Okay. Let's get Mr. Santosh Raveshia into the conversation. Sir, any plans for some acquisitions with the money that you get?
So basically, if you see historically, in 2015, we had this acquisition in place, which was Microwood, which was Pioneer Stationery Private Limited. Through this particular company, we got access to paper stationery as a category. Here, sir, when we invested, the investment in 2015 was around 4 crore, for this acquisition. The turnover of this company was around 4 crore when we acquired this company. And in 2023, we were able to reach 138 crore from this business. So, sir, we strongly believe that with partnerships, we have been able to grow much well. And going forward, if there are attractive opportunities ahead, we would certainly we would be happy to explore. But nothing as of now we have in place.
Okay. With that, Mr. Raveshia and Mr. Shah, thank you so much for joining us and sharing the details of how the IPO proceeds will be used at DOMS Industries. Of course, ladies and gentlemen, it's a 1,200 crore rupee IPO priced in the vicinity of 750 to 790 rupees per share. And the gentlemen have already managed an oversubscription of 30 times. Welcome to a fantastic bull market, and we hope you get listed as soon as possible and appear first on Market Today and Business Today television to discuss your financials. Congratulations once again, and best of luck to both gentlemen.
Thank you.